All right, good morning. Hello, everyone. Tim Davis coming to you guys with another market update. Today is Monday, March 11th, 2024. Time now is it's about 4:30 a.m. Wanted to do this quick market update before I head out for the day. Going to start off by taking a look at the futures market. The futures market is what's running. Take a look at the futures market to show how things will pan out to be, how things are starting to pan out to be as we start today. And I want to point out some key levels where the market is starting to see and still seeing some stall. So you see this trend line I have drawn up here. This is looking at a 4-hour chart. I'm gonna start looking at the 4-hour chart. I'm gonna back up from a 4-hour chart all the way to a weekly chart and show you guys where the market is found some struggle. Market is starting to find some stall, and right where it's stalling on a consistent basis, which leads me to believe that it's an area that we can see a struggle until we get a reversal in the market where the market starts to give up a lot of these gains that we've seen over the past month or two. So with that said, taking a look at this Dow Jones futures chart. So this area up here where we at now, around this 39,000 level, a little bit over 39,000, so close to 39,200, is an area that we see that the market has run into some problems. See overnight in the futures, we gapped up to that level. Hit that level, it's almost like a hard ceiling, and came right back down. See the RSI in overbought territory on this 4-hour chart. And if I was to switch to a daily chart, you'll see that same area of concern has been a level that the market has seen before in the past. And normally, guys follow me for a while, you normally say, you hear me a lot of times say that when we've seen that form of resistance in the past, it can be an area of struggle for the future. And as you can see, over the past, I guess, week or two, every time we hit that level, we have found some struggle. We found some struggle. So are we about to find struggle here again? That's a possibility. So pay close attention to that as we head through the rest of this day. And if we were to look at a weekly chart, you'll see the same area of struggle that the markets have been battling with for quite some time. So for multiple weeks in a row, we have been battling with this level up here with RSI in overbought territory. So do we stay in overbought territory? Do we eventually work ourselves out of this area? I think if I was a better man, I'd say we eventually work ourselves out of this area and start to find some room to the downside because there is a lot of it. There's a lot of space down here for markets to pull back to the downside. So we had to see, do we stall here or do we break above this level of resistance? We had to see, but we're starting to stall at these levels. And if we was to switch to a look at the S&P E-minis features, we will see same type of scenario. This is a weekly chart. Look at the RSI in overbought territory. RSI is in overbought territory, showing a level of 84 on a weekly chart. And we're right at this level that we are starting to see some stall. Back up to a daily chart, you'll see this level up here has been a level that we have stalled at before, that we've hit that level before and had issues. We hit it on around, say, March the 8th, and we started to see some struggle, which was last week. We pull up a 4-hour chart. You'll see how we gapped up to this level overnight and stalled out, pulled back. And now we're trying to see if we're going to hold this level or not, or do we come down? We have to wait and see. It looks like all markets are starting to show some exhaustion here. That is a look at the S&P minis. Let's take a look at the NASDAQ futures. NASDAQ futures, same scenario in the area where we have found some struggle. Right up around this 18,000, let's call it 18,320 or above that level. It's been an area of struggle. We've got up to as far as 436 and pull right back to this level for more struggle. As you can see, overnight, we gapped up from levels of support back up to this level of resistance and starting to falter or phase out or stall. And we switch to a daily chart. Again, see this level has appeared to be a strong level of resistance. I'm highlighting all this to show you guys this is a level, between the 8,300 to 8,400. We have been struggling in this level since the beginning of March. And seems to be that the market eventually is going to digest this level of resistance, either to the downside, to the upside. My guess would be to the downside. Look at the Russell futures. Again, Russell futures right up to around this level, this $2,100 level. Again, between 2,100, 2,121 is where we've been trading at. See, we're at this level again. We're starting to see some red candles form, and we are in overbought territory as well. Looking at the RSI, showing the RSI above 70 now on the Russell 2000 futures. To back it out, look at a weekly chart. And the Russell, looking at this weekly chart, this is a level that we hit before in the past, a long time ago, believe it or not. So we've been at this level before. Right over here, back in March of 2022, that was a level of resistance. And we're back at that level now again. Hit it there, hit it there. And previously, it used to be a level of support right here around December, November of 2021. Broke through that level, and then it became resistance. And we're back at that level again, where it is now, acting as a level of resistance again. So until we break through it, it's going to continue to be resistance instead of support. So again, that's just a brief overview of where we stand right now, showing you that the market appears to be butting its head up against a ceiling and is struggling to break through that ceiling as we speak. Now let's take a look at the VIX, because the VIX is also showing something interesting that could suggest that markets could definitely be in store for a definite move or continue move to the downside. Looking at the VIX, I want to point out one thing, that even though we see, this is a weekly chart too, the VIX, I like this one, because even though we see the VIX have been hanging right around this level of support for quite a bit, it's starting to creep up just ever so slightly off of that $12 level and back up to around 15 now. Creep up ever so slightly, right at a level of resistance, or right at a moving average level. So do we pull back here, or do we continue higher? My guess, I would say we possibly could continue higher, because even though the markets were, the VIX was trading around here at the support level for quite a bit since November. Look at what the VIX started doing this summer. The RSI level has started to curl up while staying at a level of support. That leads me to believe that the VIX has been on a launching pad down here, just building up some momentum, building up steam. Building its base down here for a launching pad. Look at the stochastics. It was in oversold territory. They're no longer in oversold territory. It's starting to rise. And look at the Williams percentage. struggled with oversold territory back and forth, but now it's starting to rise as well. So it looks like we are starting to come out of oversold territory on the VIX. So are we about to break higher in a major way? That's what it looks like. It's a possibility that we could start to see the VIX really march up and possibly head up towards that $20 level. But have to wait and see. But right now, everything is pointing to a higher VIX over time and a lower overall market. So that's what the markets, major markets look like. Wanted to point that out before we get through the day. Let's take a glance at gold, because gold is just showing the opposite, like it wants to continue its breakout. Now I highlighted some levels here as well, because it looks like gold is definitely in. Let's go to a monthly chart. I want to show you guys what the bigger picture looks like before we back it out. So we see gold is definitely in a breakout phase, folks, because look at where gold has been at before in the past. Back here in 2020, that $2,100 level has always been a strong level of resistance. We hit it around July of 2020. I'm sorry, that's July of 2020, and we pulled back. We hit it here again around the beginning of 2022 and got the pullback. Hit it here again around April 2023, got the pullback. Then we marched back up to it again right around October 2023, and we started to really battle. No huge pullback, but we've been hanging around that high for a bit. And then all of a sudden, getting in 2024, we start to break out above the level. Now, that 2100 level appears to be a level of support. So former resistance now appears to be a level of support. I'm going to start to back it out and see what the here and now looks like. Here now, I'm going to point out that, again, we breached above the $2,100 level, which is right down here. Shot above it right here back in December, pulled right back towards that $2,100 level. So this pretty much created a new area of support, which is around 2155. And we broke back above the $2,100 level here, towards the end of February, beginning of March. Got it to as high as 2203, and it looks like we are starting to see some kind of pullback or consolidation around this level. First level support now looks to be a new one, 2155 or 2150, and next level support, which seems to be 2100. But I think 2100 is going to be a solid level of support. Any pullback to 2155, 2150 or 2100 to me would be a buy-in opportunity for those who have not in the market yet. So I think gold is going to shoot up well above 2200 eventually. So gold is in a bull market or in a up trending phase with some pullbacks ahead. Look at silver, same scenario. And I'm not even going to look at too many of these. It's just the same scenario. Got it to as high as almost 26, pulled back at another level of resistance, right around 2490, somewhere around there. Level of support right here above the moving averages, right around 2386. So in between this level, we could see some consolidation before we catapult back up towards 26. That's what the silver market looks like. And one more we take a look at crude oil. All right, crude oil is hanging right around, and I'm gonna back this out and look at a daily chart, because daily chart really paints a picture. That this 200-day moving average, folks, this is this red line, this 200-day moving average. You see, price has been trying to hang around at 200-day moving average for a very long time. So we hang around and moving at that 200-day moving average on a daily. So that's between 77.50 or a little bit around 77, between 77 to 78, 77 to 80, pretty much 77 to 80. It's been a level that we've been bouncing back and forth between, hanging right around this 200-day moving average, folks. I think eventually this 200-day moving average is really going to be it's going to become a level of support that we're going to be able. I think oil will be able to sustain level above that level. Right now, we're definitely seeing that the market is still wants to hang around this 200-day moving average. So between 77 to 80 is where price action is liable to continue to stagnate between. Ultimate breakout, if we break above 82, which is this trend line I got up here, above this 82.30, 82.50 level, we can see a sustained move higher in an overall market of oil. So keep that in mind. All right, folks, that is all I have for you guys on this morning as we prepare for the market open later on today. Hopefully, this is a blueprint that you can use to hopefully help you out in your trading on this weekend, the rest of the month of March. Enjoy the rest of your day, folks.